Hello there, traders. Welcome to today's live stream. It is Tuesday, the 8th of April. My name is John, Senior Market Analyst. I'm going to be taking you through all things markets this week, where to kind of focus some of our attention when it comes to strength and weakness. And we'll also be going over some of the key data points for the week ahead. We're going to talk a little bit about as well creating the trader reports, where our big hedge funds positioning themselves, considering the market moves that we've had recently. We also have an RBNZ interest rate decision coming up too. But before I dive into that, there is some big news that has just been announced. And this is something that you guys have asked me about constantly for the past couple of years. So I can finally tell you that Blueberry are now partnered with TradingView. So if you do want to trade through TradingView, you can do so through Blueberry. This is something that we've been in the pipeline for a long time now. All the benefits you get include sort of the charting software here on TradingView and whatnot. But if you do want to log in, you have to go and set up your Blueberry X account. So if you go onto your Blueberry platform, go into your client area, go to your accounts, you can set up what is known as a Blueberry X account, and that is how you're going to log into Blueberry here. So if you go into the trading panel and we scroll down, you can see there we are right there. All you need to do is click on that, apply your username. I already got my username and my password already set in, but once you do that, you can just click connect, and then you can connect to the platform and connect to TradingView. So big step for us when it comes to kind of giving you guys more platforms to trade with, more platforms to work with. So really excited about that. So hope you guys enjoy that feature. There'll be more news about this coming up very, very shortly. I'm going to be making some quick guides as well on how you can set yourselves up on TradingView. So keep your eye out for that. So yeah, more stuff coming as well. Being able to partner with TradingView is great because we get to give you access to all these different types of charting softwares. We can even do sort of chart templates and things like that. So if you are a Blueberry client, go check that out. There'll be more details on the way as well. Yeah, great news. Hi, Rye Guy. Hope you're doing well. Hi, Vincent. Hi, Dan. Hope everybody is doing well today. I mean, what a roller coaster the market's been through recently, right? It's been a very interesting market. I'd love to know if any of you guys have been trading it. I've traded it a little bit. I basically was short Bitcoin for a little bit. I got out of that position. Was very interested in getting short again yesterday, but I kind of didn't pull the trigger there. And the market did actually pull back a little bit. So you can see we're up at this kind of like 1.3% on the day. But I was looking at sort of continuing to try and sell this down to 70k, considering where the market kind of narrative is at the moment, right? And that's something that we need to discuss today, is what is the market narrative at the moment. And obviously the narrative is around tariffs, right? That is the big news. It's kind of, with the thing with the market is how will tariffs kind of be impacting the markets, number one. Two, what is the market reacting to? Now, I don't know if you saw this yesterday, but there was a tweet out supposedly from the one of Trump's advisors, basically saying that Trump is considering a 90-day pause on tariffs, but except for China. And the market rallied on that information. And it just shows you how sensitive the market is now to any positive news. So I think, that being said, we are starting to see a little bit of bullishness coming back into the market. This is highly likely. Whether this is a sustained move, though, that's something we're going to have to look into. Looking at the volatility right now, we've had a sharp move higher, right? And this is the sort of thing that we talk about often on the channel, is when you see a sharp move higher in the VIX, usually that tells you risk sentiment in the market, and obviously that is high right now. But what you typically get, as the VIX kind of slows down and continues to kind of grind lower, you actually see a lot of bullishness in terms of risk assets. So whether we get that this time, though, that is the question. Are we in an environment where this narrative has finished playing out and we're not going to see any more spikes in volatility? Now, in my opinion, I don't think it's over yet. Obviously, there's still a lot of back and forth between President Trump and China at the moment, or the US and China. China coming out with some retaliatory tariffs. President Trump has gone back and said, well, we're going to announce further tariffs on you unless you pull out of your reciprocal tariffs. And I don't really see either of them budging right now. I think if we do see some kind of parlay negotiation between the US and China, I think volatility will fall in that regard. I think we'll probably see risk on again, and I think we'll see stock markets climb. But the longer these two nations butt heads, and the longer these two nations kind of clash on tariffs and trade, then I think the more negative this is for markets, especially when it comes to kind of US stocks and things like that. So I don't think the narrative here is done yet. Like we've talked about in the past, it's thinking about where we are in the narrative. And look, we're at a point where we've overextended a lot. Markets or people that were short in this condition, or at least getting out of long positions, this is crude oil, by the way, they are obviously either going to take some profits at these points, or they're going to be looking at sort of repositioning themselves. And we have to ask ourselves the question as retail traders: is this a good place to be trying to get in and short in the market? No, we want to see pullbacks. We want to see the market pull back into areas of resistance before seeing continuations to the downside. The benefit of being a retail trader is that we have ultimate flexibility. We can adapt quickly, and we have ultimate flexibility. We may not have the capital that these hedge funds have, but at the same time, they can't trade in the markets the way that we can. They can't just dip themselves in and out, in and out, in and out. Especially when it comes to kind of currency markets, they have to, stack orders. They have to place orders at specific price points, or at least try and get the best price possible. Whereas we can be nimble, we can be able to kind of dip in and out of the market. So I think for me at the moment, I'm not really focusing on any kind of sort of aggressive selling of these markets still, because I just think these markets have gone a little bit of a way now. I would rather see the markets pull back. Does that mean I'm trading any of the pullbacks? No, but we can see the sentiment here right now, very aggressive downside move. I don't really like any kind of upside. I think if we do see strong upside, I think that's going to be met with selling, as long as these kind of negotiations between the US and China continue the way they have been continuing. Let's go take a look at what's coming up for the week ahead then. So there is some big data coming up. First of all, we've got the RBNZ interest rate decision. They are expected to cut interest rates by 25 basis points. Okay, right, guys, see your message there. Just standing on the side. That's absolutely perfect. Sometimes it's better to just be cash. There's no reason to try and dive into the markets just for the sake of trying to catch this move here. But yeah, RBNZ looking to cut rates. That is highly likely. If we go take a look at the previous statement from the RBNZ, we can see here that at the summary of the meeting in February, they basically said here the committee expects relative price shifts will not affect inflation over the medium term. So basically what they've said is inflation is kind of comfortable between the 1% to 3% target range. And core inflation continuing to converge to the midpoint. So the RBNZ's inflation expectations are pretty much where they want it to be right now, and that means that they're probably going to cut interest rates. And you can see that here. It says expectations of future inflation, the pricing intentions of firms, and the degree of spare productive capacity are consistent with the CPI inflation target being sustainably achieved. So they've said that they've achieved their targets when it comes to inflation. So this provides the context and the confidence for the committee to continuing lowering the interest rates and at a faster pace than projected in November. So if we go take a look at the New Zealand dollar against the US dollar, since sort of February, okay, so this was February 2025, we can see that the market has been kind of fluctuating between these two levels. I did like longs on Kiwi only if we could break above 5,800, and we didn't. That was the market's point where it thought it's a good price to start selling Kiwi dollars, and then the markets continued down. So on this kind of basis alone, I would be more sort of negative towards the New Zealand dollar on a fundamental point of view, because they've openly stated that they're going to cut rates at a faster pace than previously projected. So I think we are going to see some continued downside in the New Zealand dollar. It's just whether the market is interested in this data right now. That's the one thing we need to look at. So what we'll look at going into tomorrow is how the market has moved on this information. So let's say we get the interest rate cut, but nothing happens, right, in terms of currency pricing. That the market's not really focused on even interest rates, which would be quite a big story in itself. So we'll keep an eye on what's moving markets. Bank of Japan Governor Ueda speaking as well. There is potential now that the Bank of Japan don't cut rates. Reason being is because of the current situation in the market right now. The Japanese yen has been getting stronger because of the uncertainty. It's naturally getting stronger as well. So there might not be a need for the BOJ to cut interest rates, which is, again, quite an interesting thing to see. So, let's say we've got this aggressive buying of the Japanese yen at the moment, yet the BOJ Governor Ueda comes out and says, actually, because of recent currency fluctuations, there's no need for us to hike interest rates. That could be fairly negative yen. Because the market is very much predicting, I was predicting that the BOJ would hike interest rates. So, we'll see how that one plays out as well. And then Thursday and Friday are big data points. We've got core CPI coming out of the US. So this will be watched very, very closely, because if we start to see CPI on the rise, that would kind of go against the kind of narrative of the market as well at the moment, which seems to be sort of interest rate cuts and whatnot from the Fed. So that'll be another interesting watch. And finally, GDP out the UK expected to rise a little bit. The UK is not in a great position right now. Well, from my point of view, it's not in a great position right now. So, I quite like the idea of selling pound in the short term. And then obviously we've got core PPI and the big E, consumer sentiment. So the market is being driven by consumer sentiment at the moment. We've seen that over the past, few weeks or a couple of months at least. Consumer sentiment really started to shift negative. That has been felt across markets, and we're starting to see that, impact from tariffs, basically, because consumer sentiment is just showing us what consumers believe in the market. What are their inflation expectations? Their inflation expectation is that inflation is going to be higher at 5%. So there's a bit of a mixed message going on here at the moment. They think inflation is going to be higher, but at the same time, demand is falling as well. So a lot going on in terms of data still to come up for this week. But as of today, there's not been too much in terms of kind of high impact data. And we do have a couple of Fed member speeches today, plus President Trump speaks at some point. But looking at dollar yen, market's driving a little bit lower right now. I don't see, it depends really what happens in the 10-year yields, because at the moment bond yields are ripping higher. 30-year yields jumped from 4.3% up to 4.6%. 10-year yields jumped from 3.9% up to 4.24%. So again, that's a big kind of change in the market narrative here. We had that obviously aggressive downside when the announcement of the tariffs came in, and now we're having this sort of rewind of that. So yields are starting to rip higher again, which is interesting to see. Whether that will hold weight or not, again, we're going to have a little look at that. But essentially, if this yield keeps rising, then the chances actually of a rate cut just diminish in that sense from the Fed. But also, the US 10-year yields and dollar yen have a very strong correlation with each other. So if you see US 10-year yields ripping higher, the likelihood is that US dollar yen is going to rip with it. And we'll probably see 148.75, 150 again when it comes to US dollar, Japanese yen. That being said, is that a tradable opportunity? Maybe. Maybe you could look at sort of this kind of double bottom neckline that's been kind of tested at the moment. Maybe some kind of change in trend there lead to a bit of upside as well, because if yields are rising, then the dollar does typically rise in that moment as well. And at the moment, it's fairly negative, but a breach back above 103.50 would be a little bit more bullish dollar there. Hi, Ruston. Hope you are well. Right, guy, looking at the charts, I might try to short S&P, and if that works, that might be it for this week, unless something else pops up. Yeah, I mean, stocks are really interesting, aren't they? Because you can look at it in two ways. As an investor, you're like, fantastic, because prices just dipped aggressively. So this is a good sort of point to start buying back into it. But, on a sentiment basis, is it good to be a buyer as well? I mean, when you look at the monthly chart, that's a very strong upward trend still. It's not, I don't think it's panic yet, right? The market is still making these very much strong higher high, higher lows. I quite like this previous level as well, because it was the previous kind of monthly highs that were broken. And it's just been retested now. So I think, again, it's going to all depend on sort of sentiment in the market. The momentum is definitely to the bearish side of things right now. So I don't necessarily want to go against that. And, is this really going to be a moment where we just get sort of like a dead cat bounce and the market starts kind of taking off again? I don't think so. I think we're probably more likely to see some kind of, double bottom reversal instead. So I still feel like the market coming down, testing these levels makes a lot of sense. I think if we breach 4,500, then something a bit more serious is going on. And I think we'll probably see a little bit more downside when it comes to the S&P from that point of view. But right now, I don't see too much in terms of, aggressive kind of upside. We'll see how consumer sentiment turns out at the end of this week. Let's say we see sort of a bit more downside, consumer sentiment's negative at the end of the week, but prices kind of break higher, then that'll show you that the market maybe starts to see that there's a bottom forming for the time being. Hi, Ratish. I think I'll take a break from trading until things settle down a bit. That's a good thing to do. That is absolutely a good thing to do. Like I said at the start of the live stream, I've been active, but I've only really been active in sort of risk assets. So Bitcoin for me was one I was really liking the opportunity to short. I did short up here, okay, but I've not really added into any position here, and I've already took some profits, so I'm not in anything right now. I do have an alert set, because I think if we do start changing trend here, then I do want to be short Bitcoin, because there's just some air of, you know, we've had a kind of a real decent crash in the market in terms of just kind of stocks and things like that, but we haven't really seen that over here, have we? You know, although the market has kind of grinded lower, we've not really seen aggressiveness in terms of kind of Bitcoin positioning. It kind of makes you think, does that mean that retail haven't got involved yet, right? Because if retail were overexposed, they'd be looking to sell assets across the board, right? And one of their assets that retail are heavily involved with is Bitcoin. So I don't think we're quite there yet. And I do feel like that's why I think there's a little bit more to come from this market, because I do feel like at some point retail are going to get hit and they're going to have to liquidate their positions, and Bitcoin could trade lower. That's just my theory anyway. Okay, that's just kind of a theory. It's not, I haven't got anything to back that up per se, but it's just kind of like a feeling of what's going on in the market. But that being said, you know, it's still below the daily 50 moving average, which means I'm still bearish this market for now. If we can get sort of a move back to 70k, I don't think that's a bad thing. One thing I read earlier was the fact that MicroStrategy, which I don't know if any of you know anything about MicroStrategy, they are run by a guy called Michael Saylor, and they basically turned into a Bitcoin reserve at some point over the past kind of couple of years. So MicroStrategy was just sort of like a tech company. They weren't actually doing that great as a tech company. If we kind of go back in the past, they had like a little bit of a boom, but it just kind of flatlined, and you can see all the earnings there, just red. And then they kind of pivoted, and they pivoted hard, and they pivoted into being basically a Bitcoin reserve. And when Bitcoin kind of went on that sort of massive run, it dragged MicroStrategy with it, because they were just holding Bitcoin essentially. So if you just go and put a Bitcoin chart to compare, you'll pretty much see that they move very similar in terms of movement. So you can see that when Bitcoin goes, you know, MicroStrategy follows along after. When we go sideways, MicroStrategy follows. When Bitcoin starts ramping up again, MicroStrategy rallies. When Bitcoin starts rolling over, so does MicroStrategy, right? So what's interesting about this is, though, basically every sort of quarter or month, MicroStrategy release a kind of an update to what they're doing in terms of what they're buying, and they do it and they give it to the SEC basically. Now last week it showed that MicroStrategy, for the first time in a very long time, didn't buy a single Bitcoin, and it's very interesting to see that, considering the fact that prices are lower, Bitcoin prices are lower. So surely as a company that is a reserve, you think, well, prices are lower, let's take advantage of it, let's buy into it. And even they're not buying into it. So it just kind of shows you, you know, the sentiment around right now. And I think that means that we probably are going to see Bitcoin prices a little bit lower, maybe MicroStrategy back down towards these kind of previous areas of support and resistance. You know, I like Bitcoin around 70k. I think if we get around 70k, that's a good level to be at in terms of kind of like thinking about just Bitcoin in general as a good price point, right? Whereas if I look at MicroStrategy, that means we'll probably be trading towards this kind of $200 level, maybe even 179s, which again kind of turns it into a little bit of a nicer place to be a buyer of when you've got this kind of consolidation area in here. So yeah, something just to consider going forward. I'm going to set an alert there on MicroStrategy, to be honest. See if we get anything, because I think if that lines up with the Bitcoin price, it's something I want to be a part of. So we'll see. So yeah, I've got an alert set on Bitcoin. Let's see if I get that move. Another one as well. You know, honestly, in these type of markets, I just want to short risk assets. So, you know, even Ripple could be one to target as well. We've got this kind of huge head and shoulders pattern on this. Lots of low volume in this area, big volume down towards 50 cents. So, you know, if we can kind of stay below this kind of $2 level, then, you know, maybe we'll see some downside in a lot of these crypto assets as well. We just need another kicker. We need another kicker now to see, you know, if we can get some further downside on these kind of markets. Because, like I said, I don't think the narrative is done here. Yes, if everything stays pretty calm, we'll see some downside in the VIX, some upside in risk assets. But, you know, how likely is that? Because tomorrow, you know, we could see another kickoff in terms of Trump versus China. Let me just see if let me go to Forex Live. Let's see if they're just reporting anything when it comes to Trump. Waiting for China call. Let's see. I had a great call with acting president of South Korea. We talked about the tremendous surplus, tariffs, shipbuilding, large-scale purchases of US gas, their joint venture in Alaska pipeline, and payment for big-time military protection we provide to South Korea. They began these military payments during my first term. Billions of dollars, but sleepy Joe Biden for reasons unknown terminate the deal. Blah, 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 blah. So he is still, you know, going in for tariffs, you know. So I don't see how this doesn't continue to kind of push that narrative in the long run. Yeah, and treasury yields are rising right now. So interesting market movements right now. Let's go see what big money is doing. Tunji, welcome. Hope you are doing well. Matter starts at 38% drop. I'll buy if it retraces to 61.8. Yeah. So are you looking at my fib there? Because I draw my fibs backwards. It's just how I was taught to do it. Just because when I was using projection lines of sort of the 127 and the 161.8, I had them as positive numbers to my Fibonacci. So I don't draw them as you typically would see. You would typically see that people go from the swing high down to the swing low, and then you've got the sort of 61.88 on the downside. Honestly, it doesn't really matter which way you draw it, because they're all the same. They're all the same. You know, the distance between 1 and 61.8 is the same distance between 0 and 38.2. So there's no big difference there. But yeah, that can confuse some. Right, guy, maybe Trump announces more tariffs tomorrow. Exactly, and that's the thing. There's still this air of uncertainty around, isn't there? And I think if that uncertainty continues to remain, then these kind of small bounces that we're getting at the moment could just be sort of like investors who have either got sold the highs and done really well taking profits, or people that have been long for a while are starting to just capitulate some of their moves. You know, this was there, I reckon. That kind of break below that low, they got out of their positions, which drove prices lower. Probably you started to buy some up here. And then, you know, if we get another move to the downside, the same thing will probably happen. They'll probably add in as price falls, because that's what institutions do, really. You know, if we look at, let's have a look at the financials and see what hedge funds did this week. Sorry, that's our treasury bills indices. Here we go. I'll be surprised if they shorted aggressively. So I want to look at the E-minis. Yeah, I mean, look at that. They went from negative 53,000, right, on March 25th. And so let's have a look. March 25th. What day was that for us? There, right? So in the March 25th report, it showed us, so that would have been the week prior. So we would have got that information on Friday the 28th. So March 25th, they basically reduced their long contracts massively. But look at that now. So from the difference between there and April 1st, so where is April 1st? They already bought in on that sort of mini kind of downside move there, that almost that double bottom, because they went from being 53,000 contracts in the negative up to 19,000. So that's quite a big jump up. And I imagine what we'll see in the report on Friday, that would be bought up again. That would be buying again, because the price has just been moving down. And that's what they tend to do when it comes to stocks. NASDAQ as well, they're buying the NASDAQ. They did reduce contracts from 22,000 to 8,000, back up into the 15s now. Again, you know, we saw that kind of capitulation there. Dow is the only one that's still kind of negative on right now, and also the Russell. So the Russell, they're not really buying at the moment. And the Russell has been fairly hard hit by this. And I think, you know, if we do start to see the 10-year yields rising aggressively, and then dollar strengthens, and then the idea of them cutting interest rates, the Fed cutting interest rates lowers, I think the Russell will probably see a little bit more downside as well. Let's go have a little look at the CME Fed Watch, because the last time I looked at this, it was a 60-something% chance. Yeah, so it's changed again. Right, so the market is really struggling to price in what's going to happen in May's meeting. It was 81% chance of no cut from the Federal Reserve. That changed to 61.5%. Now it's up to 75.8%. So there's a lot of fluctuation between sort of high or sort of low 80s and sort of low 60s on kind of rate cut predictions at the moment. So yeah, and again, this is all going to depend on what happens in the yields. You know, if you see 2-year yields rallying significantly, then the chances of them cutting interest rates on the 7th of May gets even lower. You know, and we'll probably see it up into sort of the 80s, the 90s by that time in there. So that's quite interesting to have a little look at. But let's flick back to the reports. Let's go take a look at some currencies and see where hedge funds are kind of positioning themselves. So, you know, they've reduced their contracts in the Great British Pound. They were at 44,000, now only up 34,000. So they reduced some of their position in here. The Canadian dollar, they added to some shorts. Let me go to the summary report and we can see here. So yeah, negative minus 9,000 there for the pound. Negative 482, so not too much change in terms of Canadian dollar. Euro is a big one. They've actually decreased their long positions by 13,000 contracts, and also New Zealand as well. But let's go open up Euro a little bit, because I'm interested in Euro at the moment, because of where obviously the market has been in terms of strength. When it comes to Euro, we kind of tapped into the 111 last week, and we've kind of given a few of those moves back. So I was wondering how Euro would play out this trading week. You know, looking at this kind of still above the 50 moving average on this 4-hour chart, still above it on the daily chart. So I wondered if, you know, that dollar did weaken, would we see a move up into 112? Doesn't look like that's going to be the case right now, because of where yields are going. I mean, let's have a little look. So I guess they reached a certain extreme, right? That was the highest levels they've been since when is that? October of last year. So October, November, December, January, February, March, April. So that was the highest levels we'd seen in 6 months. So that would be technically an extreme. But I think this could go a lot higher. I do think this would go a lot higher. We're just going to have to see some kind of difference in terms of the yields there. Let's have a look at what commercials are doing. They're selling euro as expected because euro has moved higher, so they'll be selling their positions. What are the small speculators doing? Again, they've been buying through this period as well. Reduced a few of their contracts though, so not really anything telling there, I would say. When it comes to kind of looking at extremes, you want to see the ones that are kind of closer to either the right or the left hand side. Japanese yen still being aggressively bought right now, so this could be one where you could start to again just kind of think about what the market narrative is and what it's trying to price in. Usually when we get to these extremes, I want to be looking to short on a reversal, but because of the narrative in the market at the moment, is that a smart thing to do? Not really, in my opinion. I think that we'll probably see continued strength in the Japanese yen, especially up into this kind of resistance level here. Then we might see the turn and a bit of a move lower. But I don't really see the sell-off in Japanese yen right now happening. It takes something big. I think it takes something big. Some big data needs to change. Right, this makes currency strength and weakness analysis very, very tricky. Now, that being said, if you had watched last Tuesday, and we did go through the currency strength meter. Let me see if I've still got the old. Let me see if I've still got the old screenshot. I do like to take a screenshot of the FX currency strength meter, but it might not be. It might be on my laptop. I think it was on my laptop, so I've not booted it over yet. Let me see if I can find out, because basically last week we were talking about it hasn't really changed too much here. We were talking about sort of Aussie Swiss downside. We were talking about Euro, Oz, long, things like that. And those worked out really well. I mean, I was Aussie Kiwi short as well, which, I got out at these lows here for like a 1.8, 1.9R or something. And look at what it did in the end. It did 6R. So I wanted to be kind of flat going into the tariffs just because of the uncertainty. But, that would have been a really nice, trade. And I did journal this looking back, saying that maybe in the future where we have some kind of high volatility, maybe I just bank half at the lows and then try and, scale my stop loss in at the kind of previous daily swing highs or something like that. So, looking at that move there was pretty nice. Could that continue as well? One thing that I wanted to just kind of show you quickly is the market is favoring the Swiss franc over the Japanese yen right now. When you look at Swiss yen, we found support down at 166 and it's now back up at 172. So although the yen is strong, the Swissy is stronger. The Swissy is stronger at the moment. So market is definitely favoring that one. Sorry, Rogai, when you say sell-off in yen, can you explain that a bit more? Yeah, so when I mean the sell-off in yen, that means kind of dollar-yen upside. So when I say sell the Japanese yen, it just means I think dollar-yen is probably going to move a little bit higher. When I look at the commitment of trader reports, I like to look at extremes. And when those extremes have been met, it's about where the... then you can kind of add other layers onto it, right? So a good example, I guess, is let's say we have an extreme on the Japanese yen right now, and we want to sell it against a stronger currency. We can use currency strength and weakness analysis to identify what that stronger currency is, right? So when was that report? So it was on the 3rd of March. We were looking at, sorry, I have to look at this because it goes into American way of dates and it really throws me. It's just something that's always thrown me. 3rd of March 2025, was when we had the signal to potentially sell Japanese yen because we reached an historic extreme. So when you look at this chart here, this is the Japanese yen futures chart. So I'll show you that on TradingView as well. So if you want to see Japanese yen futures, the symbol for that is 6J1. So if you type in 6J1, okay, you can't do that there. You go up here, type in 6J1, and it's the Japanese yen futures by the CME. So you can get that on your chart and have a little look at the futures price. But the futures is just inverse dollar yen, right? So if I grab US dollar Japanese yen, they are just the opposite to each other. So I'll just pop this on a new left scale, turn these to regular, and then you can see that they're the opposite. So essentially when Japanese yen futures rise, dollar yen moves lower. So one thing that you can do, just kind of help you with this, is just invert the scale, right? So when I say sell Japanese yen futures, I mean sort of dollar yen upside, because it would be, so basically Japanese yen, that's the futures, right, is US dollar JPY, but the opposite way around. So it would actually be JPY US dollar, right? That's the crux of it. So if I actually invert that scale back to normal and click compare and go to JPY USD, okay, which you can get, just put it on a new price scale, you'll see that they are exactly the same. Okay, so when I say sell Japanese yen because of that extreme, and I'm expecting the Japanese yen futures to fall, it just means that I'm expecting dollar yen to rise. But you know, it's not always against the US dollar where you'll feel or see the most benefit of that. So like I said, Swiss franc has been the strongest currency recently, and when we look at the Swiss franc against the Japanese yen, and if we looked at that from the 3rd of March here, look at the move that we've had here. We've had quite a nice little decent upside move in this market, but I don't think we would have seen any benefit in the yen across other markets. You know, Kiwi yen's down, Aussie yen's down, pound yen, which is a market that I really favored to the downside, up at this 194.50. That has also come in lower. This is a market I really like the idea of being short on. I think the Bank of England are going to have to cut, and I think they're going to have to cut aggressively soon. Tax rises are just coming into the UK as well, as of 4 days ago, so, or 4 or 5 days ago. So I think that there's a potential for pound to weaken further. So I'm actively looking for pound yen short ideas right now. What is SSR? I don't know what SSR is. Where have you seen that somewhere? Is that on the screen somewhere? SSR. I don't know what that is, sorry. But yeah, I do like pound yen to the downside. Again, it's just kind of, you know, think of the market in phases still. Just because the market is a little bit crazy right now and there's been a lot of big moves doesn't mean that we abandon everything that we know and everything that we follow, right? Markets move down, fine. Let's wait for the pullback, you know, and if we get that pullback, do we get the change in trend on the lower time frame? Do we get the opportunity to sell? Pound yen is definitely one that I've got on my list when it comes to currency strength and weakness. So looking at what's going on right now, we can see that the pound is a currency that has been weakening, which is something I want to try and take advantage of. The New Zealand is weaker. Aussie is weaker as well, although it's in a reversal zone now. Dollar is still technically a little bit weaker, but I don't really want to be touching dollar pairs at this moment in time. I just want to be looking at the cross pairs. CAD has also given back those gains pretty easily. So really speaking, this week I wanted to be short pound, wanted to be short CAD pairs. I want to be looking at sort of the Swiss franc longs potentially and Japanese yen longs. And again, look how that kind of shows you the sentiment within the market right now, is that the market is definitely risk off, because the two risk off currencies are the best performing currencies right now. So that just shows you how much uncertainty is still sort of around in the markets at this current moment in time. So we shall see if that can continue. But again, you just got to wait for those pullbacks. I know I still like the idea of being in these markets, and we'll see what happens. I mean, these stock market bounces in the media, everyone will be like, rebounds happening, rebounds happening, rebounds happening. I'm not so sure yet, because you've got to think about how the market will rebound, and it's fairly positive on Donald Trump rewinding those tariffs. And if he used it as a big negotiation tool, then fine. And what we'll probably see then is that as he goes and negotiates with these countries, he then, winds back some of the tariffs. And if he does, probably is good for the market. But I think when you have the two biggest economies battling each other for a kind of global market space, is that really a good thing? I don't know. Short selling restrictions by the SEC. Can you explain? Kind of. I'm not sort of fully clued up on it, but basically what will happen is, because selling has become so aggressive, they'll cap the exchange basically, and if it gets to a certain point, they'll prevent short selling happening, and that's just to basically narrow down the volatility of the market, because they set the rules. Otherwise, if they don't cap it and they just let it free flow, then the whole market could crash, and that's not exactly what they want to happen. So obviously in these kind of situations, you get to a point where, let's say the S&P 500 fell kind of 7 or 8% today alone, then usually you'll see that the SEC will halt trading on that specific market. So yeah, it's just kind of a regulation thing to kind of prevent massive fluctuations in price. Ratish, are yen and Swiss the remaining safe haven currencies, not the US dollar for the short, medium term? Yeah, I think so. I think we're going to have to. So this kind of brings me back to a point which is in Brent Donnelly's book about the US dollar smile. Let's see if I can get it up again. I might be able to bring it up online rather than trying for me to show you in a book. Very good book, by the way. If you are interested in how FX markets kind of just like live, breathe, work, then this is definitely a very good book to have a look into. So yeah, everyone's talking about the US dollar smile at the moment, which, let's see if I can get an image of that up. US dollar smile. Everything you need to know about the dollar smile. Let's see. Is there an image? Okay, so I don't know whether this is the same, but let's read through it. So because this is a big theory at the moment, and it's called the US dollar smile, right? Let me just expand this up a little bit so you can see it. So everything you need to know about the dollar smile, foreign exchange market, blah, 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 blah. Let's have a look. So one intriguing theory that attempts to describe the behavior of the US dollar, the world's most traded currency, is the dollar smile theory. So what is this theory? Coined by Stephen Yen in 2001, Yen, while working at Morgan Stanley, the dollar smile theory I've never seen that word in my life. Posits that the US dollar benefits in good times and bad. Jen, who holds a PhD in economics, is now a hedge fund manager, recognized a recurring pattern in the performance of the US dollar. The currency would appreciate in times of strong US economic growth. This can be referred to as risk-on scenario, in which riskier assets tend to outperform. That's pretty self-explanatory. We've seen that, we've witnessed that over recent times, Equally, when the US is in a global recession, US or a global recession takes hold, a risk-off scenario that can trigger safe haven dollar buying, while everything in between should see a weaker US dollar. And this is what's in Brent Donnelly's book as well. It's essentially saying that the US kind of weakens due to sort of a weak economy, but it will strengthen in times of economic uncertainty, but also strength when there is significant risk on. And that's why they call it the smile, because it's got that kind of smile to it. And this is what the market is kind of really focusing on at the moment, is do we see that kind of, where are we on this kind of economic sort of smile, right? Where are we on this? And at the moment, we're probably like here, I would say, on the smile. The reason why that is because we've had the US dollar strength, right? Pretty much the end of last year, we had that US dollar strength. We then started to have a sort of weak economy in terms of, there were certain numbers that were coming out of the US which started to show weakness, and that's led to US dollar weakness. Are we at this kind of point now, though, where if we do start to see sort of risk, risk in terms of just risk off and whatnot, and people move into that sort of risk, are we going to see the US dollar start to sort of strengthen again? I mean, that's the opposite side. If we just swap those two over, kind of go this way, right? Are we kind of here right now, or are we here? Because there's still potential dollar weakness to come in the short term. But that's why we need to follow what the bond market is doing, because when you see bonds starting to rally, then that is a real good sign that we are going to see US dollar strength in the markets as well. So there's an explanation here that we can read through. The right side of the dollar smiles curve explains that when real GDP, so that's gross domestic product, increases, this usually leads to US Federal Reserve tightening policy, so increasing the Fed funds target range and the US dollar appreciating. So yeah, that's good economic data, usually leads to higher inflation, which usually leads to the US dollar appreciating, and that's how we see that in terms of bond yields. This is a reasonable assumption, and one that would not raise too many eyebrows. Now, if an economy is outperforming, asset prices like stocks and bonds are rallying, foreign investment will subsequently increase and create demand for the US dollar. Simple, right? Left side of the dollar smile. The left side of the dollar smiles curve suggests that the US or a global recession can equally lift the US dollar. On the surface, this may seem counterintuitive. Why would the US dollar rally at a time when stocks and bonds trade lower and risk aversion becomes the dominant sentiment? It happens because when the US enters a recessionary period, markets and economists fear that the global economy will follow suit. We must understand that the dollar is perceived as a safe haven currency. Why? Because it's the world reserve currency, right? One which is bought as investors look to US treasuries, for example, in times of market uncertainty and recession. The US, with its reputation for global dominance, that's world reserve currency, and economic political stability, don't know about that one anymore, becomes a prime destination. This flight to safety fuels safe haven buying of the US dollar, fueling a rally in the major currency. One such example of this sharp appreciation was the 2008 financial crisis. might have heard the phrase, when America sneezes, the rest of the world catches a cold. That's very true. You know, the world is more globally connected than it has ever been. And if problems arise in the world's biggest economy, then this can filter through to the rest of the world. Okay. But are we in that at the moment? Are we in a recession? Recession fears have grown, but we've seen this kind of downside come just because of the situation with Trump right now, right? Where are we on the curve now? As you would expect, that many moving parts behind price movement in the foreign exchange, including central bank, blah, 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 blah. Okay. According to the US dollar index, the dollar is up 3 points. That's as of right in this. So I don't know when this was written, in 2023. Looks like it. So yeah, we don't really need to know any more than that. But yeah, just keep this in mind, right? Keep this in mind. The US dollar does strengthen in times of recession. Okay. Now, looking at the US dollar index right now, that's not necessarily the case here just yet. Okay. But like I said, one factor that we can really look for, and this is something that I just think that everybody should watch, just watch bond yields, right? If you watch the 10-year bond yields, it will tell you kind of everything what's going on in terms of investor sentiment. It will tell you everything you need to know in terms of currency appreciation and depreciation. You know, when you see this kind of downside coming in, you know that the dollar's going to get weaker. You know, this was happening around the 16th and 15th of January, you know, and that's exactly when the US dollar index started its way. I mean, at this point here, traders still thought that the US dollar was bullish. Okay, now that is around the 4th of February. But if you just kept an eye on your US 10-year yields around the 4th of February, this market's already breaking through 50 moving average. It's already finished that sort of head and shoulders pattern. It's here. So, you know, there's a lot of theories that was downside from that point, yet we saw that kind of push back up into the highs there on the US dollar index. So really, you want to just be watching your bond markets. They're gonna price in what you need to know. Yeah, I mean, let's be fair. He probably has ratish, you know. Economic and political stability, I don't think is what you would class America in right now. I don't think that is where we're at. No, that's absolutely correct, right, guy. That's the official narrative anyway. That's the kind of like the narrative was that when you get it's two quarters, isn't it? 2 quarters of negative growth, then you are technically in a recession. Quite interesting though, actually. The CEO of BlackRock was speaking on Bloomberg yesterday, and he said that the contacts that he's got and the CEOs that he speaks to, he asked them if they thought that we were in a recession, and they all said yes. So that was quite interesting to hear as well. I'm pretty sure I might be wrong, you might be right. I think it's 2 quarters. 2 quarters. 2 quarters of negative GDP. Yeah, 2 consecutive quarters of negative GDP is the definition of a recession. Okay. So I don't know where we are in terms of that. Let's go on to GDP growth rate. I don't know whether this won't. Yeah, Q4 2024. So yeah, we don't have the Q4 data there just yet, or Q1 data of 2025. Let's look. Can I go out a bit further? So technically here, this is 2020, right? Q1, Q2, that was a technical recession there back in 2020. We had 1 negative in 2022, but that was kind of driven by that sort of higher inflation, which was just kind of, again, inflation can erode currency strength. So yeah, can't go max anymore because trading economics wants you to pay for it now. They sent an email to not take out stock to all investors. Yeah, I mean, you probably find the SEC probably have something to just kind of tell you. SEC short selling restrictions. Because I don't deal with stock markets all that often. I'm more currency trader. I use stocks to understand the sentiment within the market rather than physically trading them. I don't trade stocks all that often. But let's have a look if there's anything on here that can kind of help us help you explain that. An SEC rule governing short sales. Let's see. That doesn't explain it. Right, let's see. There's a new rule that's come out from the SEC as of October 24. No, starting January 2025, managers holding short positions exceeding $10 million or 2.5% of a company's share must file a SHO on a monthly basis. This measure is designed to increase transparency of short selling activities. Okay, so it looks like they do it because short selling activities are often less transparent than long positions, making it difficult for investors and regulators to detect potential market manipulation. At times, this lack of insight has led to situations that destabilize the market. The increased transparency, the new form SHO SEC short selling reporting rules provides. That doesn't even make sense. The increased transparency, the new form, short selling reporting rule should make it easier to detect market manipulation. Okay. So, yeah, I guess they're basically trying to prevent what it's saying there, market manipulation, by cutting short selling. Short selling restrictions. Okay, here's a little brief on it on Investopedia. I will send that into the chat, and you can have a little look at that if you wish. But yeah, it's just basically saying since the Great Depression, short selling has been a scapegoat in many market downturns. In a short sale, an investor sells shares in the market which are borrowed and delivered at settlement. Short selling has been blamed for market crashes. Yeah, so basically what I was saying earlier, they don't want to destabilize the market. They don't want to crash the market. Let's just see. Right. Regulators have banned short selling either temporarily or more permanently in order to restore investor confidence or to stabilize falling markets, under the belief that short selling either triggered a crisis or made it worse. Okay. So in 2008, temporary short selling bans and restrictions were seen in the US, Britain, France, Germany. Many governments over the years have taken actions to limit or regulate short selling due to its connection with a number of stock market sell-offs, other financial crises. So basically, they say that they do it to kind of prevent global recession, but let's be fair, they're doing it to protect their own stock, aren't they? So yeah, there's a nice little thing on that you can have a little look at and have a little look at in your own time. No worries, right guy, catch you later. Thanks for joining me today. So yeah guys, to be honest, I think I might leave it there as well. You know, there's not too much going on in terms of market moves. You know, we can have a little brief look at gold. Gold has kind of come back into the channel lows here. I still feel like gold could potentially move higher, but you know, in times of uncertainty, everything gets sold off. It doesn't really matter what it is. You know, gold got sold off as well. Silver got sold off aggressively, which baffled me a little bit. I didn't expect this kind of big sell-off. I expected some kind of sell-off. We were up at that 34.50 area. Did I expect something that big? Absolutely not. You know, I thought maybe $33 would be the kind of base for price. Or, you know, this trend line support was an area I like the idea of buying it. But the market has sold off aggressively there when it comes to silver. Gold-silver ratio, though, breached that sort of 100 level and is up at 104s. If this continues to drive lower, I still like silver longs, I must admit. You know, I still like silver longs. So 4 hours starting to kind of change trend there, but I don't know if I want to buy it just yet. I want to see if we get some kind of, you know, like double bottom pattern and then maybe a move up, something like that. But yeah, still like gold and silver upside. If we do see another big sell-off in stocks, though, gold and silver will go with it. Gold and silver will go with it because people kind of, you know, take profits on their positions to kind of cover their losses elsewhere. Oil as well, really interesting the oil market is to me. We've got obviously the narrative that Trump wants to produce more, but then you had OPEC backing it up. And again on Friday, so you see this candlestick here. Right, price was at the kind of $67 support, and then OPEC came out and announced that they're going to produce more oil as well. And you just think, wow, you know, that's going to drive prices lower. The problem they've got is obviously if Trump lowers oil prices in the US, how are OPEC or OPEC countries, how are they going to compete in the global oil market? They won't be able to compete. So they've also decided to increase production as well, which is driving those prices lower. So I think for me, oil prices to the downside looks good as well. I'm looking for kind of pullbacks for continuations at the moment. So keep an eye on those as well. So, all right, guys, I'm going to leave it there. Thank you for joining me today. I really appreciate it. Hi, Ibrahim. Sorry, I'm sorry you've just come on. I'm just about to leave. I hope you all have a great rest of your trading day. I will see you again on Thursday. We'll see how the market's played out. Let's see if the tariffs continue to roll out. That'll be interesting. But be safe, guys. Sometimes it's better to just be holding on to cash rather than trying to get involved with the market. You know, if you want to be in this game for a long time, then, you know, it's just another week, isn't it? And we'll see how things settle down after. Okay. So thanks for joining me, guys. Appreciate it all. Appreciate you all. Can't get my words out today. And I will catch you on Thursday. Right. Cheers, guys.